So as Felix mentioned, I'm going to be talking about some of the open source stuff that I've done with Finmarketpy, and then also in particular trying to link up Finmarketpy with xlwings. Okay, so the first thing is I'll show you how to use this open source library FinDataPy to download market data. And you can use that to download market data from several different sources, including Quandl, Bloomberg. I'm also trying to add more data providers as well to it. Also, it has lots of crypto data sources as well in it. And then we're going to move on to how to do a back test with xlwings as a front end and Finmarketpy. And then lastly, I'm going to talk about using xlwings as a front end for Finmarketpy to do an event study, basically looking at the price action on an intraday basis for euro-dollar around economic data events. And all this code is, basically the code is online on GitHub, so you can download it and play around with it as you want later. So just a bit of background about FinDataPy. So the issues that you tend to find is obviously all the market data providers have different sorts of APIs. So if you want to switch from one provider to another, you have to change lots of your code. So the main reason I wanted to write FinDataPy is to have a unified wrapper. I'm sure a lot of people have already developed this type of thing in-house, but I didn't find anything specifically on GitHub exactly like that. And the idea is we create a market data request object, which has, for example, the tickers that we want, the market data source, what fields of market data we want. And it also supports ticker mappings as well. So you can map between your name of the ticker versus, for example, the code of your data provider as well. So at the moment, I've got a few mappings for FX pairs with Bloomberg tickers, mainly because I basically do FX for most of my analysis. But you can always add like equity tickers, whatever you wanted in the mapping. Okay, so first of all, we're going to do a bunch of imports that we'll need to use later. So obviously pandas, that's going to be used quite a lot in this. We want to inline any of the charts. I don't actually think we'll use it here, but I generally put that at the beginning. Also, I'm going to grab the Quandl API key, Fred as well, and then we're going to import the FinDataPy object. So we have the market object, and that's kind of the most important object. And essentially, that will take a market data request, and then from that, it will actually generate the data. So it will poll an external source, pull it, and then put it back. So here we create a market data request. So we have the start date of our market data, the finish date, our name for the ticker. Then we have the ticker on the vendor side. So I've already looked this up, essentially. So this is a euro-dollar spot data. In this instance, our data source is going to be Quandl, and then we put the API key below here. And the API key is free to get, so you just need to go onto the Quandl website to get your own API key. And then we specify this parameter for cache algo. So that's going to be an optional parameter, but I'll show you some trick that we can do later to change that, and it kind of improves what we're doing. So the first thing is we need to create a market object. And then the market data generator is designed to basically get data from an external source. You could also extend the market data generator as well to do your own customized downloads if you wanted to. So there we go. So we created a market object with the market data generator. So if we want to download the market data, the first thing that we do is that we basically just put it as a parameter for the fetch market method, and then that will return a data frame for us. And you can see some of the output below here. So we make a request for Quandl data, then about a second later, we get it back. And then we also can cache it. So I've got Redis installed on my machine as well. So that's just an in-memory cache. The idea being that if we want to download the exact same request later, then potentially we can actually save time and not have to go to the external source. Obviously, once your machine is turned off and your RAM is wiped, it's removed. But for the course of the time that your machine is on, it will basically cache that in the RAM later on. And that's basically what this stuff is saying here. So it will be pushed to Redis. If you haven't got Redis installed, it will still work, but it will end up giving you a warning here saying it hasn't been cached in Redis. Okay, so that took 1 second, essentially, to download that. If we want to, in the market data request, we can change the parameter for the cache algo, and then we can change it to cache algo return. The idea here is if we put that in the parameterization, what it will do is it will first check in Redis, have we made this market data request before? If we have, then it will go to Redis and download it. If not, then it will go to the external data source. And this can be quite useful, like particularly if you end up back-testing a lot of things. You will end up probably stopping your Python program. Maybe you'll restart your Python kernel, etc. And then you'll wipe any of the contents of the memory. Whilst this way, you can have it stored in external process Redis, so you don't need to constantly be downloading data repeatedly. OK, there we go. So now, in this instance, we've changed the parameter for the cache algo parameter in the market data request. So we've changed that to cache algo return. And then when we fetch from the market, even with the printing, it's only taken 26 milliseconds. I think if we hadn't put the print, it would have probably been even quicker. So it's a lot quicker, obviously, to get data from a local source that's cached than an external source across the web. And you can see here it's saying, look, loading Redis cache. And this is basically the market data request that we're loading from that. And then we're just printing it out. So you can see we've printed out the output for $, between the 1st of January to the 8th there. If we end up having a different request, however, it's going to be slower. Let's say we change the finish date to 30th of December 2019. That's a different market data request. So now it's actually going to go out to Quandl and download that data for us. And it will recache it in Redis down here. OK. We can also try downloading from Bloomberg as well, which is another source. Here I'm downloading FX pairs, and I've already got these mapped in a CSV file on disk. So in this instance, I basically have the ticker name $. I have a special category for FX. I need to change the data source to Bloomberg, and then I'm also getting the closing data. And you can see that now, basically, we request the Bloomberg data. We start the session. This is the request that's going to Bloomberg with the start date and the end date. But you can see switching market data sources was very easy. We just needed to change a few keywords. We didn't have to rewrite all of our code. So let's print a few points to check what the data looks like. There we go. The underlying Bloomberg Python API has different calls for daily and intraday data. But I've basically written everything underneath, so it's all transparent to the user. So you just make the same call with market data requests. All we need to do now to get intraday data is we just change the frequency parameter here. That's all. And then we can actually get the intraday data from that, despite the fact that the underlying API for intraday data on Bloomberg is actually very different. OK, let's print the first few intraday points. OK. We can also download other sources, including from Dukascopy, which is a retail broker, to get free FX tick data, although this is delayed, so you can't really use it for trading. So if we want to download from Dukascopy, again, you can see that everything is pretty similar. The key difference is here, we're getting tick data, so we need to put tick in the frequency parameter. We put Dukascopy for the vendor as well. OK, we can print the last few entries there from Dukascopy. OK. So the reason why I wanted to show you that is we're going to use that format using the market data request and the market object to do a back test with the Finmarketpy library. And then I've written a wrapper on top of it so it can be accessed via xlwings through Excel. So I'm going to just show you a really simple strategy, which is a trend following strategy. One of the rationales for why trend following works is that it's behavioral. So when people see the price moving up a lot, they want to jump after it. So one example of that can be seen recently if you've seen Tesla stock. It's basically kept going up and up and up, and people have got a fear of missing out from that. And there's also been a big short squeeze in that. You could also argue that during periods of economic expansion, you see big trends in the market, and conversely, when you have contracting economic cycles, then you'll see the reversal of that trend. So there's kind of an underlying economic reason why you'd have long-term trends within the market. So if we want to create a backtest, there's several steps that we need to. I have to say I've simplified this somewhat. But the first step is we need to download the market data and also any other data to generate a signal. So it could be data like alternative data, whatever data you want. Then we need to have a total return index for our traded asset. We then calculate the returns on our traded asset. We generate a trading signal, a buy-sell. So typically this will be like a +1 or a -1. And you spend basically, you spend all your time on that. So all the other bits are kind of quite generic, but the key difference is creating a trading signal. Then we multiply our returns by our trading signal to get the strategy returns. Then we calculate the return statistics, so things like what's the annualized returns of our strategy, what's the annualized volatility of the strategy, also information ratio, drawdown as well, because drawdown is probably what gets you fired in the end, so that's a really important thing. And then we create a cumulative strategy index, which is basically usually indexed from 100 and shows us how much money we would have made if we started from $100. So hopefully it will be a positive number and not a negative number, but you can see basically that most of this is going to be fairly repetitive, whatever strategy you do. And as mentioned, the key thing will be generating a trading signal. That's the key difference there. So we've created a spreadsheet, backtest_Excel, and also the Python script, backtest_Excel, which has all the accompanying Python code. And this is on GitHub. And there's a small amount of VBA code needed that xlwings will use to handle the interaction between Excel and Python. We've already seen how we can download market data with FinDataPy, and we'll reuse that now. OK, so we need to again do a few of the imports. So we import some of the FinDataPy objects. We also need to import some of the backtesting objects from Finmarketpy. So the backtest request object will tell us the start date of a backtest, the end date, the transaction cost. And then the backtest object does kind of all the funky stuff in terms of multiplying returns by signals, calculating the annualized returns, and so on. We've also got some objects here like tech indicator, which calculate a simple moving average. So the idea being that our signal is going to be based on a simple moving average. So if the current spot price is above the moving average, then we buy. If the spot price is below, we sell. So that's kind of one of the most simple trend following rules. Okay. Oops. Okay, I think I clicked on something and didn't like it. So. Okay, there we go. So our main function takes in what ticker we want to backtest and other parameters for the process. In this instance, we're using, as I mentioned, the trend following strategy, and as I just said, just using the spot and the moving average to generate the signal. You could have many other sorts of signals, but this is kind of something which people commonly use in the market, and also it's relatively straightforward. Okay, so to construct the backtest, we have the ticker, the vendor ticker, what the moving average period is, the data source, the start date. Also, we have the Quandl API key. We create the backtest object. We create the backtest request. We set all the parameters for the backtest, like the start date, the finish date, the transaction costs. Then we create the tech params object. We need to tell it what moving average period you want to calculate our moving average over. Then we download the market data. So we create a market data request using the parameters of the ticker and also the data source, potentially the Quandl API key. And then here we go. We fetch market, and we get the data frame with the market data. Here we construct the technical indicator and the signal. So the signal will have basically ones and -1s. And to do the backtest is one line here. So we make a call to the backtest object in Finmarketpy. We give it the parameters for the backtest. We give it the market data, so the euro-dollar spot. And then we give it the signal as well, the +1s and the -1s. And lastly, we extract the cumulative portfolio returns, which are generated by the backtest object. We also extract the signals too, the +1s and the -1s, and then we return that to the user. Okay. The next step is we need to create a method with xlwings for interacting between Python and xlwings to wrap around our backtesting function. And we basically get the parameters from an Excel spreadsheet. So here we get the vendor ticker from cell B2, we get the ticker, the data source, the moving average period, the start date. Then we run our previous function, which constructs the backtest, and then we dump the output back to Excel here. So let's go to the spreadsheet now, so I can do a demo of it running. Okay, so here we've got euro dollar. I've already got this already, but let's do a different pair. Let's, for example, let's do dollar yen. I'm using Bloomberg here in this instance. Okay, I'm going to change it from Quandl. Okay, so let's do the back test. So this is a Bloomberg ticket, and let's actually change that to dollar yen. Okay, so if we do the back test. Okay, there we go. So if we go back to back test, there, it's generated it for dollar yen now. So it's basically done a download from Bloomberg. So if we go here, we can see some of the calls it's done. So basically, it's done this call to Bloomberg. It's got the dollar yen data. Then it's calculated the trading P&L, and then also the cumulative index calculations. So that's actually pretty cool that it didn't take too much code to do a backtest. And the nice thing is we have the front end with Excel and xlwings, so it's easy to interact with without having to mess with the code. Okay, and then I'll just quickly, I think I've got a few minutes left, so I've got one demo here. The next thing I'm going to do is do an intraday event study with xlwings and Finmarketpy. So I'm going to use a high-frequency tick data set for euro-dollar. I've already got the data saved on disk in a Parquet file because it's going to take ages to download otherwise. So this is basically, this is just showing you the code for downloading data. If you were to run it on your own machine, it would take quite a long time to download the data. But in this case, I've already got the Parquet file on disk. So it's going to basically just read that and then use this read Parquet method in pandas. Then we calculate the mid price. Then we resample the tick data to 1 minute data and drop any of the nans. Okay, so this is basically the method. So once we run it, we can get the 1 minute data for euro-dollar. So now we create a function for doing the event study. So it takes as inputs the 1 minute data for our asset and also the event times that we wish to investigate. So the event times here are going to be event times when the US employment report was released. And then we can use the event study class from Finmarketpy to do the actual computation. So here we do calculate event. We have df minute with the spot data, the event times, and then these are parameters given to the intraday moves function in event study. And then we have as an output the price moves. Again, there needs to be a function to interact between Excel and Python. So we use xlwings to grab the various parameters that we need from Excel, such as the path of the tick data and also the event times as well, which will be used in the event study. So this is the function here. So we get the event times from the sheet, the raw data as well, and then we basically wrap around the event times into a pandas data frame. We get the spot data, which is from disk, and then we resample to 1 minute data. We run the event study, and then we dump the event output into Excel. Okay, so let's go back to Excel to demonstrate the code. Okay, so I can, let me just delete this to show you that I haven't got pre-canned it. Okay, so let's do our, so these are the event study points. It's actually only going to give us data in 2019 because my spot data is only 2019 data, so it's going to ignore all the others. So if we do event study, okay. There we go, so it should come back shortly. We go to event study. Here it's populated it, so this is the non-farm payrolls at 1:30 GMT on 4th of January 2019. So this was a price 5 minutes before. Here's after payrolls, just before after payrolls was released. So if we go on the right-hand side, we can see, obviously, the price jumps around the data release. Beforehand, not much happens. And we can see, for example, here that the price went down a lot, then it kind of ended up coming back. So we've actually got quite a lot of data to go through to actually generate this. If we were to do this directly in Excel, we'd probably have quite a few issues because it maybe would run out of memory. The 1 minute data would have too many rows, whilst here we can factor out the computation in Python and use xlwings to go back and forth. I guess we could have done a chart in a matplotlib and displayed it with xlwings, but I haven't done that in this instance. Okay. Okay. So I guess as a conclusion, we've seen some of the open source libraries. So in particular, we've looked at xlwings and trying to use it as a front end for some of my open source libraries of FinDataPy and Finmarketpy. So all of the libraries are on GitHub, and the example I've got is also on GitHub as well. So feel free to download it, play around with it, and if there's anybody who wants to contribute to my libraries, please let me know. I always want to add new data providers as well. So that's another thing that you could have a look at. All right, thanks everyone. Hopefully I've not gone over my allotted time. So. All right, thank you.